Investing in crypto is really beautiful because we've got so much data to work with. The blockchain is an open book, it's an open ledger. We can have a look at how many holders are there that long-term hold Bitcoin, how many holders are there that have a lot of Bitcoin. We can see what is retail doing versus what are the whales doing. Now in this video, I want to go through that segregation in terms of minimum holding threshold, as in how many wallets are there that have 1 Bitcoin? How many wallets are there that have 100 Bitcoin? How many wallets are there that have 10,000 Bitcoin? And is the reason why the Bitcoin price goes up over time really because there's more and more active investors getting into the space? I don't think so. Check this out. This is the number of active addresses. This is a very long-term chart. It starts when Bitcoin was just a few cents, goes all the way up to today. And initially, the number of active addresses was growing quite constantly. But then it peaked at the end of the bull run in 2017. We really haven't seen any active address growth in the last 8 years. But during that time, Bitcoin went from $1,000 all the way to our current prices. So we don't need more active addresses for the price to long-term appreciate. The same trend can be observed with the number of new addresses. Do we need more and more new people? Again, the answer is no. The level that we're seeing today, with roughly 300,000 new addresses per day, is something that we've already seen 8 years ago. And at that particular point in time, Bitcoin was at around $500, maybe $600. What's really going on is that people that like Bitcoin tend to simply just accumulate it further and further. Bitcoin is a savings vehicle. It's an alternative to buying stocks. It's an alternative to buying property. And maybe it's also an alternative to buying gold. Now have a look at this. This is the number of addresses, counting every single one with just a few little cents in it. And there's no surprise that this tends to rise over time. There's now more than 50 million such addresses. The number of those addresses roughly doubled since the peak of 2017. The price, though, more than quadrupled. Again, indicating that it's simply just the existing holders that continue to buy in. In other words, the data suggests that Bitcoin is a sticky product, right? Once you start using Bitcoin, you tend to continue using it for a while, not necessarily actively for trading around, but simply just for holding, for storing value. Now let's go up in the minimum holding thresholds because there are interesting different takeaways. Let's start off with the addresses with 0.01 Bitcoin. So that's the number of wallets that have at least $600 or so in their wallet. It's not a huge investment by any stretch of the imagination, but it's also not nothing. We see again how this tends to go up over time. So there's real adoption as a growth vehicle. The only times where we see this going down is during a massive crypto crash. We do have our temporary slowdowns though. And since beginning of this year, we are in such a slowdown. So Bitcoin was still able to grow by roughly 30%, while the number of small retail investors with $600 did not grow. Let's look at $6,000. So that's people that use this now really as a savings vehicle, that don't just have play money in it. That also somewhat slowed down since beginning of the year. It's a bit smoother of an adoption trend though. There's now 4.5 million such wallets. Now that number shows me that the majority of investors really aren't yet using Bitcoin as a diversifier. Because in the US alone, there's roughly 162 million brokerage accounts. And so in relation to that, people that store Bitcoin off-chain are less than 3%. Now there's obviously also people that have Bitcoin on centralized exchanges and they might speculate with crypto. But still, if you look at this in the grand scheme of things, it doesn't look like the market had completely matured, even though it does appear that returns are somewhat diminishing over time. Right? In the early days, we tended to go up much faster in the price compared to now. Here's the problem with crypto YouTube. People promoting becoming degen or buying 100x coins. That's what gives clicks, but that's not what's going to bring you forward. I refuse to take money from centralized exchanges. I refuse to take money from crypto projects. I refuse to pump and dump a coin and filling up my pockets in the background. I don't do any of this. Instead, I share my knowledge in the form of tutorials in the premium membership. So that's content that won't do well on YouTube, but that builds up skill over time. You can also directly contact me over there. You can directly pick my brain. Feel free to check it out. TheBitcoinStrategy.com is the link. Now let's have a look at the target that a lot of Bitcoiners have. You start off with dollar cost averaging into Bitcoin, and then you hope that at some point you will own an entire Bitcoin. How many people with an entire Bitcoin in their cold storage are there? The answer is roughly 1 million. And this has not changed in the last 12 months, roughly. Now there's something very interesting about this chart. The common narrative is that a lot of people simply get onboarded when Bitcoin's price is very high, right? When we've seen just a rally, when everybody gets hyped up about Bitcoin, this is when money tends to flow into crypto. But it's not necessarily true for the people that hold Bitcoin long-term, that store it in their hardware wallet. Because let's have a look at this again. When do the number of wallets with exactly 1 Bitcoin grow? It tends to grow the fastest when the price gets depressed, right? When the price is lower and lower. That's when people buy heavily into Bitcoin, and that's when they hold it. Once the price reaches those all-time highs again, then the growth stops. So people are now indeed waiting for buying opportunities to hold Bitcoin long term. And when Bitcoin is close to its all-time high, in the past that still worked, right? In the past we still continued growing, but that's now not necessarily anymore the case, right? We are rallying massively, but your average retail investor that actually does successfully diversify from the stock portfolio and from property, that actually does have more than a Bitcoin, they don't buy during that rally. The number of wallets is not going up during such a rally. It's when the price gets depressed, it's when the price crashes. That's when those long-term holders buy. And so here's what I believe we can take from this. It looks like there are people in the market that use Bitcoin as a savings vehicle and that simply just wait for the next dip. Thus, when we crash again by 60 or 70%, we are very likely going to see a recovery rather fast afterwards. There are people on the sidelines holding cash and they just wait for the drop and they buy up that drop and then they wait simply until the price recovers. And some of them might sell at those higher prices, but in aggregate, they don't, right? In aggregate, they simply continue holding, which will very likely cause the Bitcoin price in the future to still make higher lows and higher highs in the future. Let's look at the people with serious cash in Bitcoin. This is now the number of addresses with at least 10 BTC. So that's more than $500,000 worth of Bitcoin in a single wallet. Most people might rather split up their capital into several wallets when they own that many Bitcoin. But have a look at this. This did actually not increase since the peak in 2017, where we then subsequently went from 20K all the way down to 3.5K. So it's not the massive whales that are pushing up the price, right? The Bitcoin price from that point on 3x'd again. The number of those whales with more than $500,000 worth of Bitcoin did not 3x. Let's go further, another 10x. So that's now $6 million worth of Bitcoin. Here we see the inflection point even earlier. Some selling that happened during the bull run, even more selling when the bear market kicked in. And now those whales simply just continue holding. It's simply just another diversifier, while those people probably still hold similar amounts of stock and property and precious metal, etc. Now at 1,000 Bitcoin per wallet, we almost get into the territory of centralized exchanges, because this is now 60 million worth of Bitcoin. Not a lot of people have 60 million in a single address. There's only 2,000 such wallets. And because this is such a big balance, we also have quite a bit of volatility in that graph. Now for the largest minimum holding threshold, so 10,000 Bitcoin or $600 million worth of Bitcoin, we are definitely in centralized exchange territory. We are also in the territory of ETF holdings and of institutional money in general. And again, the higher we go in the minimum holding threshold, the longer we have to go back to similar kinds of levels. So no growth in the last 10 years even. But what's also interesting here is how the number of those wallets tend to go down when the price peaks and how it tends to go up when the price bottoms. currently those super hyper large wallets tend to go down in numbers. Or in other words, they're taking profit, right? Very similar to what we've seen at the beginning of 2021. This is not necessarily great for Bitcoin's price action. So here's what I take from all of those numbers. We do see continued adoption across the board. We do see how retail investors continue to buy. We don't see how it's actively used in trading, but Bitcoin is definitely used as a savings vehicle. The current active addresses tend to continue to accumulate over time. And so for the Bitcoin price to continue rising, we actually don't even need to see more investors onboarding. We simply just need to see the current investors continue doing what they are already doing, and that means dollar cost average, buy more every month. And so this is where Bitcoin is different to your average meme coin or to your average DeFi project, because there aren't any VCs in there that have a lot of the supply that can dump on you. Bitcoin has already risen that much compared to its early days that all the people that bought early and wanted to sell already have sold. So the Bitcoin supply is very nicely evenly spread while adoption continues to grow. And it especially grows when Bitcoin experiences a crash. So that volatility that everybody is scared about, those 50-60% crashes in the price, they're actually very healthy for the Bitcoin ecosystem, because that's when the long-term investors tend to buy in quite heavily. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. In case you've got Telegram, then you're more than welcome to join. The link is down below. Looking very much forward to chatting with you.